I want to welcome everyone back to another edition of Forex Tech Magazine. This is your host, Lewis. And before we get into this, I want to just go over the disclaimer real quick. The disclaimer goes a little something like this. Any and all information that's given by or shared by Forex Magazine should be considered to be for educational and entertainment purposes only. Nothing that we share with you should be considered to be for uh, should not be considered to be financial advice. If you have questions about financial advice, then our suggestion to you would be to find yourself a licensed, competent advisor. And before we go into why you came here, I just need to do some quick housekeeping. I'm trying to make sure all my channels is up. Unfortunately, we've been having some technical errors this morning with this internet connection. So I just want to make sure we're good to go. Let's see. We are not, and I'm not sure why. Okay, anyway, I'm not sure what's going on here. But we're going to keep it moving. All right, so let's look at where we at right now. Now, unless you've been under a rock all day yesterday, I'm pretty sure you're aware of what happened in the market. There's some information that came out. Let's look at the economic calendar. Of course, here with the GDP for the U.S. Came in right on target, 3.5, which is really good because that means that there's definitely growth in the economy. Producer price index stayed in line, which means that inflation is in line with the expectations for the economy. Personal consumption, this is where you may have a little bit of a problem. That means essentially that people are not buying, they're not purchasing as much as previously expected. Now, and even though it's not that much off, it's 0.3. That translates to billions of dollars right there. So it could foresee a slowdown potentially in the economy. Same thing here with PCE, right? 1.5 once again could potentially point to slowdown in the economy, right? And then the real big numbers here, which even though it doesn't seem big, but this is a new home sales. Once again, home sales is a forward or leading type indicator. Some indicators you got leading, some of them are lagging, and some of them are these are coincidences or not coincidences, confirming, right? So a leading indicator is basically something that's going to give you insight to what's going to potentially happen in the future. Confirming indicators are something that's basically happening in real time, so it's kind of confirming whatever information that you already have on hand. And a lagging indicator is something that's you get the information now, but that's something that's already happened. So like the GDP is probably like a lagging almost because you're looking at what's happened over the previous quarter, and did it live up to the hype of what was anticipated was going to happen over the previous quarters for its production? Yes, it did. But when we start looking at leading indicators like home sales, right? New home sales, especially with that. And then we start seeing it's lagging or it's down significantly from where we're anticipated to be, then that tends to indicate that there may be some weakness in the economy and that spending as a whole may start to slow down going forward. Now, what does that mean if spending starts to go down going forward? Well, that means that your GDP obviously is going to come down. That means that you may be looking at a small recession or something. It may even be a bigger recession. I don't know. But it's one of those things that you definitely got to look out for. It's one of those things that may cause Feds not to raise interest rates because they're seeing that as people are slowing down in their purchasing. So that threat of inflation maybe is not as great as they previously thought it was going to be. And so now they may not necessarily need to go in and raise rates or be as aggressive as they previously were with raising rates because now the economy is getting soft, and what they don't want to do, Feds don't want to cause a recession, so they're going to do everything they can do to keep the economy going without necessarily harming the economy at the same time, if that makes sense. So, at any rate, that explains a lot as far as what we're seeing in the market today. And we're going to get back into this chart in just a minute. I want to start out at another one here. Now, I will tell you, today was a day to trade with stop losses. Sorry, guys. Excuse me. If you didn't have a stop loss on the day, then that was just a sucker trade, because you're going to get crushed. Today was a day to trade with stop losses, if ever there was a day to trade with stop losses. Because economic news came out and stuff just went everywhere, right? So if you look over here, this is Great Britain pound, is in dollars. Remember we talked about we were shorting the Great Britain pound pairs. This one right here. Was able to make profit on this one. Let's go through for a second. Yep. Came all the way back down to this level of support, which we were anticipating it would. And this one right here, we actually got stopped out on this one, which is okay because once again we had a stop loss in place. Anticipation was it was going to come back down to this area of support. It came close, but it just wasn't able to hit it, and then it went back up to resistance. And that's where we're at now, where it's coming off of resistance at the moment. I'm not looking to get back into this particular pair at the moment. I'm just going to wait maybe a day or so, see what plays out. If we get another candlestick confirming that price is going to still be moving back down. This one right here is another one, JPY. I got stopped out of this one. Did anticipate that it's going to come down a little bit more, but unfortunately, price moved up, and now of course it's coming back down doing a retracement. But once again, these little stop outs that we got wasn't big, wasn't anything major, because once again we kept our stop losses tight, just because this was a momentum play that we saw with price. It was sell off in the Great Britain pound, and so we just want to kind of participate with it. Not really looking at anything technical, fundamentally. Just, hey, everybody's selling. Let's just jump on board, but keep our stop losses tight just in case if it price reverse. That's all it was. Plus, too, we saw it was coming from resistance. So coming off resistance, selling off. Why not get in, right? This one right here is another one. Had a pretty tight stop loss in place. Why not get stopped out on this one here too as well? Small stop loss, small loss, nothing big, nothing major. Really, what I'm really excited about is here with this 4,000 that we got. With the current one they have in place, pretty much knocked out. It pretty much took care of any of those stop losses that we had. You know, the losses that we had from the stop losses, right? Because once again, we played the stop loss pretty tight. We were able to bring them down. Matter of fact, what I need to do here while I'm talking to you, so I want to show you this. All right, that's the last one for today. Bring this down here, and essentially what we have now is a risk-free trade, right? Whenever you can do a risk-free trade, go ahead and do it. You know, forget about, you know, giving the currency pair room to move and all that good stuff. Just go ahead, trust me, do the risk-free trade, because if not, what's going to happen is you're going to accidentally get in there and potentially have price move against you, and you don't want that. Because once you get that, you tapped out. Okay? This is in here. Still can't pull my stuff up. Anyway, so that was pretty good. So we did pretty good today, man. We did really good on the day. Just to give you guys an update on the CAD. I mean, with the Aussie. So we had a short for the Aussie. Once again, thank God we had a stop loss in place. Because as you can see, when that news came out earlier today, this thing took way off, right? But we had this little stop loss in place, so able to minimize any damage. I cannot stress enough to you, even if you understand how the markets move, even if you've been doing this for 30 years or whatever, how long you've been doing it for, always trade with a stop loss in place, so that way you can minimize your damages, and that way you'll be able to come back and trade again. Because as you can see, like I said before here, that 4,000 is good, because that helps eliminate any losses that we took today, right? and also gives us profit going forward for the week. So um, you gotta trade. You gotta be smart about your trades. You cannot go into the stuff just thinking that, hey, you know what, I can just wing it and I'll be okay. Because if you wing it, you're gonna get hurt. Okay, trust me on this. Well, look, guys, this once again today is going to be a pretty fairly quick one. I'm not going to be in here long today, and the only reason why is just because one, having some technical difficulties with my equipment here, so I'm not even sure that this link is actually went up on my Twitch account. So I want to get in there and straighten that out. But also, I just want to come in and just show you real quick what we're doing, and also too, I'm not going to be putting any trades on today. I'm just waiting for his last trade to play out. And probably won't get back into another trading pair. Maybe Friday I might, or either early next week is when I get back in. But anyway, I just wanted to share this with you guys real quick. God bless you. Thanks for tuning in, and I will see you tomorrow.